Welcome to the B.F. Anderson Technical Report for September 27th. Well, it's been a good quarter. Quarter ends on Friday. It's been a pretty much decent quarter after having a difficult first half. So let's get right into our primary indicator, actually a secondary indicator, which is the put-call ratio. Now, you have to realize the whole point of this exercise is to understand that markets are designed to fool most of the people most of the time. In other words, if they're not fooling most of the people, it's not a market. It's just part of the deal. So what we're trying to do here is determine when are we in greed cycles where there's too much optimism, and then is there too much pessimism? Whereas you can see as of yesterday, we're still in the greed area. We're not in an extreme greed area, but it's just something to be aware of. The market has been somewhat hot. Now, if we do get into extreme greed, I would really recommend that you kind of pare back on any buying, kind of be very selective about what you're doing. Now, the big chart this week that I would like to point to your attention is what's going on with the 10-year U.S. Treasury yield. So 10-year Treasury yields broke out of their triangular consolidation at 3%, signaling a fresh advance. And we know that the Fed did raise interest rates yesterday. And, as we see interest rates climb higher, it's going to create difficulties for bond investors. And again, as we see these allocations out there where the most financial planners and different asset allocation models where they're saying so much bonds, so much stocks, we think that there's going to be somewhat of a shift more towards allocation towards stocks. The indication here is that interest rates have broken out of a 35-year downtrend. And, this will be a rising problem for bonds. And as long as corporate earnings stay strong, stocks should continue to do well. Now, as you can see here, we broke out of a downtrend, and the indication would be that we could go as high as 4.5% within the next maybe year or two, or even by the end of this year. We don't know. The point is that a move to 4.5% would be a 50% increase in the yield on the 10-year Treasury, and that could really start to be a problem for dividend-paying type stocks where bonds start to compete with those income-generating stocks. Now, the other thing to notice here is we had a double bottom here. That's kind of a good indication. In fact, the second bottom, surpassed the low of the first bottom, which looks like a shakeout, and we're now, moving higher. So interest rates are moving up. Now, another graph that I want to mention here is oil. West Texas Intermediate. Now, you have to realize here that, starting back in 2008, 2009, the price of oil got up to $145 a barrel and then plummeted to around, $35 a barrel. Now, that is a lot of damage. That is a major, major bear market. So it's going to take a while. It's going to take a long time for oil to get back into a bullish cycle. However, I will note here that here recently, which was around the end of 2016, we got what we called a golden cross. Now, what we're looking at here is the 10-month moving average compared to the 20-month moving average, which is a long-term trend following indicator. So this is on a buy signal, so the price of oil has improved and could go back into an uptrend. Now, we all know about Exxon because we're here in Baton Rouge. Exxon stock really has shown some improvement here. We're also looking at the 10-20 moving averages, and we are on a very slight buy signal here on Exxon, but it is looking better. We're still in a consolidation box. Would be interesting to see if Exxon can break above 90. Now let's get into the top five. The top five continue to be dominated by names like Advanced Micro Devices, which is semiconductors. The stock has been acting very well. Here is a biotech stock that I'm very interested in. I've owned this stock before, looking at it again. However, I'm just watching. This is a watch list, and this is Illumina. Broke out, hit an all-time new high here recently. This company is doing quite well. Roku continues to make the list. Again, this is a company that's revolutionizing the TV industry. Stock broke out and has hit an all-time new high. Now, this is a stock that we own. It's been quite dramatic. It's our biggest winner. And it broke out on news this week, where a top analyst came out and put a price objective on the stock for 125, and he's basically saying that this could be the next FANG stock, that it's really got a lot of potential. Now, Wayfair, which is an e-commerce company primarily for things for the home, continues to look good. So basically, what I'm pointing out this morning is that interest rates are starting to move up. Oil prices are firming. The economy looks good. So hopefully the bull market continues. Thank you very much.